Good evening, this is Jack from Charles in the Markets, and this is the Bigger Picture webinar for the evening of Sunday, the 13th of July. My disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some of what I'm doing, learn from it, transfer it to your own charts. I'm not here to issue trading signals. Right. Okay, I've been talking for a while about the possibility that we might see a rally that lasted in December, but I have to say that was mainly predicated on one thing, which is that the tariffs thing would settle down and that maybe we'd get 10% tariffs across the board, but really otherwise it would largely be left alone. And that's not happening. We've had 30% tariffs starting the 1st of August announced, I think, against, or more, announced against Japan, South Korea, EU, further attacks on Canada and Mexico, high tariffs on Brazil. There's talk of more tariffs to come. We had obviously a big tariff, I think, on copper? Yeah, it was 50% tariff on copper. Trump's been talking about up to 200% on tariffs on pharmaceuticals. Tariffs are coming back in a big way, and I think actually Trump's feeling that he's achieved a lot in the last couple of months. He got his big bill passed, and that he's therefore on a roll and will continue with tariffs. If this is the case, then the prospects for the rest of the year are bleak. I think we'd have a period of topping out, and then likely we'll see quite a lot of downside. And obviously that'll vary. Will Trump chicken out? I think the problem is now that he knows that TACO really became a thing, I think that's actually a big problem for him, because he wants to think of himself as a tough negotiator, and that's making it harder to do that. So I think he's less likely to back down now, because that is the case. No, I could be wrong about that, but I think I'm probably, from just a pure psychology point of view, I think it's probably right. I really don't like tariffs, and I think they can only end badly. But it's clear that Trump disagrees, and he's held these views for 50 years. So he was talking about them in the 80s, and then the same views. I think we see what we get. But in the short term, basically, I'm thinking that we're not likely to see, in this environment, we're not likely to see an extended rally. I think it's likely topping out now. We might see higher highs afterwards. Topping is a process. But short term, we've got some nice looking double tops here, and I'm not seeing any reason to think they won't play out. Obviously, we've had quite a lot of news on tariffs over the last week. It'll take a while to feed through. It'll take a while to convince people, if he isn't going to chicken out, that he's not going to chicken out. And we will see how that goes. But really, my message here would be that if Trump's going to stick with us, then the party is in equities. This rally party is in effect over or ending. And we should really be thinking about more downside. And we've got a fair amount of indicators there. We've got a lot of daily negative divergence. We've now got a daily RSI 5 sell signal fixed on the Qs. We shall see. Short term, we've got some nice looking double tops on ES and in Q and on RTY, and I'm thinking these may well play out. We didn't quite get one on YM. We did see a new all-time high on YM, but we didn't see a retest of that high, so that means we haven't got any daily negative divergence. DAX made a new all-time high. ESTX fell just short, but we've got pretty nice looking potential large double tops on both of those. All right, let's have a look at the bigger picture charts. And looking at, we've also got coming off a high on SPX ADP as well, which I've marked in the red line for there. I mean, that doesn't necessarily mean that we see a big low. Coming from this, but I think if tariffs are coming back in a big way, and if Trump's going to stick with it this time, then that's going to be trouble, and it's going to be a lot of trouble. On ES, we've now got an RSI 14 sell signal fixed. We haven't quite got that on SPX, but we've got we've got an RSI 14 sell signal brewing on SPX, and we've got a possible RSI 5 sell signal brewing as well. Looking at the pattern setups here, I've been having a very careful look at these this weekend, because I'm planning to do post next week about this. This is obviously the final rising wedge on SPX, and I think we're probably about to break down from that. We've got a little level top. I'd be looking for a larger reversal pattern to form. I've put in a couple of necklines here. We could come down, do a retest of the high, all sorts of ways that could play out. But I think really it seems a reasonable working assumption that the rally is ending. and that this is the pattern for the rally, and that from here we might, barring retests and maybe marginal higher highs, we're likely looking lower. So we'll see. All right, on the 15-minute chart, it's a very nice wedge. So pretty peachy actually. So we shall see. All right, looking at the Qs. Sorry, we've got an RSI 5 sell signal fix, possible RSI 14 sell signal brewing. Here, I'm looking at this wedge resistance here, and it's nice. It's got a little bearish overthrow there, and we are testing rising support on it. I'm thinking we're going to start breaking down from these wedges pretty shortly. 15-minute, again, just an illustration of how nice that wedge is, which is actually pretty damn nice. All right, Dia, I was rather hoping to see a retest of this high. We haven't got any daily negative divergence here because we haven't seen a retest of that high. But I'm thinking we're probably not going to see that immediately, but we may well come back to get that later. In terms of the wedge here, it's not quite as nice as the others, but it's okay. And either you would take this, I could take it across here, but this is the trend line I'm working with, and I think it looks okay. I can change it if it goes higher, but I think this is likely good enough. I'm thinking that we'll head down to wedge support, and we will be topping out for a while, and that may involve high retests, and that could generate some nice bigger picture divergence. Looking at the Dia chart on 15-minute, we can see this isn't the greatest quality wedge. It's the best we got available. I could just draw a line through here and here, but I've stuck with this one for the time being. In practical terms, I don't think it really makes a lot of difference. In terms of the hourly charts, we've still got an hourly RSI 14 sell signal fixed on Dia, and I'm thinking that's going to play out soon. On the Qs, we've got the same. On SPX, we've got the same. Looking at IWM, that looks a little different. One, we've got this IHS, which is broken up, but I'm thinking probably now isn't going to make target. Unless, obviously, Trump decides to drop the whole tariff thing, because actually he's got a lot on his plate at the moment. He's got the major rebellion in the among the MAGAs over the Epstein files not being released, and he's got other problems. It may be that he decides to drop tariffs for a while, but at the moment it looks very much as though that's not going to happen. And if it's not going to happen, then we're looking down. In terms of the daily chart, we've now got an RSI 5 sell signal fix and an RSI 14 sell signal fix on IWM, and we've got on the hourly chart no current divergence, but here again it's a decent wedge. It's not as nice as the ones on the Qs and SPX, which I would expect to lead in any case. So I'd expect to see the best ones there, but it's okay, and it's a decent wedge, and I think it's probably going to start breaking down. Is it of a size where it could be a bear flag? Not necessarily. I'd be more inclined to think of it as an A, B, C, but we shall see. In terms of topping patterns, we don't really have one on IWM because we haven't actually made it up to the retest of the high, which is what I was hoping we would see. But in terms of the bigger picture here, on SPX, we've got, this is potentially a huge double top. I'm not saying this is necessarily going to make target, but if we did, and we got down to the 3,500 area, I've actually got that as a pretty significant technical area, so not to be ruled out. On the Qs, again, we've got another large potential level top. On Dia, again, we've got another large potential level top. Am I thinking, well, these are the patterns I'm thinking we might play out if Trump really means it about tariffs, because that's really not going to go well. One, I think it's going to go a lot better than the last time President tried this in 1930. Obviously, that ended up in the Great Depression and then a World War, so that's not a particularly high bar. But much of that was due to two things, which were one, the tariffs, which were of course a big tax increase on American citizens, and of course which was duplicated by other countries worldwide, and that's not going to happen this time. So whatever happens in the US, chances are better things will happen outside the US. We've got, because that isn't a mistake that anyone else is going to make, because they all know the history of the Great Depression. The second thing is, in Hoover, Hoover in 1932, because of the recession in 1930-31, there was actually a budget deficit for the first time in years because of that. And Hoover's response was to raise taxes by quite a lot of money. So as an addition to all the extra taxes in effect from tariffs, we then had extra income taxes, rates went up a lot across the board, but a lot. And that obviously, I think that helped trigger the Great Depression as well. Am I thinking we might see a big economic fail here? Yeah, I am. I don't think I'm not thinking in terms of the Great Depression as a previous example, but yes. Big tax increases, major drop-offs in various sectors of the economy, government employment, imports and exports. It's this is and manufacturing. I think the problem is if you really, in terms of, it's fine to put on these huge tariffs on copper and aluminium and steel, and the idea is basically that more copper will be mined. But the fact is, mining is a small issue compared to all the manufacturing companies which actually use copper in their manufacturing. All of them are going to have to pay the tariffs. For every 1,000 jobs it might gain in copper manufacturing, mining, if there are any, you'll probably lose 10 to 20,000 jobs in manufacturing. I haven't done the research on it, but that would be a reasonable guess, and might not be that far away from the mark. When tariffs put on when Trump was putting on tariffs in 2018, they reckoned on steel. I saw some studies suggesting that he saved 1,000 jobs in steel and cost with that $60,000 to $70,000 jobs in other areas of American manufacturing. Economies are complex machines, and you play around with the inputs, and if you're not really aware of what you're doing, then really bad things can happen. So I am thinking this might actually lead to a significant economic contraction in the US. But the good news for the rest of the world is that the mistake that the rest of the world made when America went down this road in 1930 will not be made again. Very few countries have imposed tariffs, and it's not because they're scared of Donald Trump, it's because they don't want to raise, in a period of economic uncertainty, they don't want to raise taxes in a big way on their own systems, which is what that would do. There will be other ways. I'll talk more about those on future ones, but that's the reality of it. And that's why not much of the response is going to be in terms of reciprocal tariffs from other countries. Actual reciprocal tariffs, like the ones in name only that Trump is doing. We'll see. But with the tariffs, we're going to see economic contraction. We're going to see higher unemployment. We're going to see problems. And they're not going to be Biden's fault. So we'll see how it develops. But am I thinking that we could get down below the April lows? Yeah, I'm definitely thinking that. So we will see how this develops. And obviously, if Trump tacos out repeatedly and then drops tariffs because he just gives up on the idea, then it need not be this way. But if he's going to really go on ahead with tariffs in a big way, then this is likely the way it's going to be. All right, great. Let's have a look at DAX and STOs. DAX, nice weak RSI 14 sell signal fix. I'm thinking that might have a shot at making target now. We haven't got any daily negative divergence, but we do have some on the weekly chart. Yeah, possible RSI 5 sell signal brewing. But what my eye is really drawn here to the nice looking double top here. Now it's not a vast double top, but if you look at the move up from the April low, this could get us back to the 50% mark. Or slightly lower, and that would be a logical place to go back to. And if we're then going to see a retest of the high, set up a nested double top, then that wouldn't surprise me either. But I'm leaning towards the downside now, and I'm really leaning across to the downside across the board on equities. All right, looking at Nikkei. Nikkei, alas, is probably not going to make this target. Maybe it will. Nikkei does beat it does march to its own drum some of the time. But I'm skeptical about it making much headway while the rest of the world markets are likely to be struggling. We shall see. All right, let's have a look at the dollar. Okay, so what's going to happen on the dollar here? I don't know. I mean, I've read people talking about studies which suggest that the dollar might go up a lot with tariffs. In which case, maybe we will see a big rally here. And certainly, we've got a little IHS. It's broken up. We've got some nice looking divergence. This could go up. We will see. In terms of, I am wondering about a retest of the low. I'm thinking this looks like a bear flag. I'm thinking a retest of the low first might well be on the cards. And if you look at the euro, that kind of looks like a bull flag. GBP USD, that kind of looks like a bull flag. Australian dollar's pretty much back at the highs already. This could be a flag on NZ, but I'm inclined to leave out Australian dollar and NZ just because I think either of them have a significant weighting in the US dollar index anyway. USD JPY and USD CAD will be important, but I don't. Neither of them's really giving a lot in short-term direction. Euro and GBP, though, together between them about 69% of the USD index, are suggesting that we might well see retests of the highs on Euro and GBP here and a retest of the low on US dollar. All right, let's have a look at those on the big picture charts. And on the US dollar, we don't have any divergence on the daily chart. We do have quite a lot of divergence on the weekly chart. We've got a possible weekly RSI 5 buy signal bearing, RSI 14 buy signal bearing, albeit a weak one. In terms of the pattern setup, obviously we've reached the megaphone support and we've got this very nice looking flag which has at the moment underthrown bullishly. This is a very nice bullish setup, and it will continue to be a bullish setup unless we go significantly lower in the breakout. If we do, I'd then have a target for this would be the topping pattern, and we'd then have a target about the 80 area. While this survives, the obvious target for this setup would actually be a retest of the high at 114.78. That looks ambitious, but I've seen some pretty wild retests on US dollar before, but we may well see another one here. This is the mirror image of what we're seeing on the dollar chart. This is to match the bull flag that we're seeing on the dollar chart. This is the bear flag on the euro. This is the bear flag on the pound, and they're very nice too. They are both naturally bearish setups on euro and GBP USD. It doesn't mean, 70% of the time they will break in the obvious direction. 30% of the time they won't, and we've yet to see obviously which way that's going to go. But at the moment, there's nothing at the moment really undermining the bull case for the high retest on the US dollar. We will see. And if tariffs are actually in favor will favor the dollar short term, then actually that would support that. Having said that, I'm slightly skeptical. We will see. USD JPY on the weekly chart, we're still looking like we're topping out in here, heading down towards this target down here in the 116 area. As I said, that isn't necessarily always about the dollar, but I would suggest that obviously it might take a while longer topping out and may go higher if the dollar is going to retest that high. All right, let's have a look at USD CAD. USD CAD, nothing really obvious here apart from the glaringly obvious possible double top here, which could take USD CAD down a long way. We shall see. What we haven't done is broken this rising support yet, and I've got that at about the 131 area. Looking at the Australian dollar, haven't broken up over trendline resistance here, but if the dollar is going to go up, chances are the Australian dollar is going to go down, and we'd have an obvious target at this trendline support, which I've currently got at about the 0.42 to 0.43 area. NZ, not sure what's happening here. This looks like a triangle. Looks very, very like a triangle. Which way would this normally break? Could be either. Could easily be either. But this could break either way. I don't think it really adds anything to the odds on the flags that we've already got. All right, let's have a look at bonds. Okay, I've been talking about bonds. ZB doing a retest of the low. We've got a possible head and shoulders forming here. If that breaks down, that would have target at a retest of the May low, which would be where I was looking for. Could proceed on from there. We will see. Then we've got what looks like it might be a bear flag here, but actually really here, I'm looking at the bigger picture charts. I'm looking at TNX and TLT particularly, and if we look at the 60-minute chart on TNX. This is the falling wedge I've been looking at for weeks, and we've broken up from it, and we may be forming an IHS, and if that breaks up, that would have a target back up at a retest this high. This is basically the inverse of the head and shoulder pattern we're seeing form on ZB. Looking at TLT, nice looking wedge here, broken down, another head and shoulders. These are all at EDM at the moment. Now these haven't, this hasn't broken down on TLT or ZB or broken up on TNX, but they're all decent looking patterns, and it kind of looks like that's the direction they're going to be heading in. Why would I expect bond yields to go up here and bonds to go down? Because the countries that Trump is really doing his very best to piss off here are actually the biggest creditors of the US. Between them, they hold almost $10 trillion of US debt. And Trump's really working to make them feel as though they're not allies of the US anymore. I'm just saying, sooner or later, some of them are likely to start selling. Actually, the amount of debt they've got of the US has actually risen by $500 billion in the last 6 months, because it kind of needs to do that. And unless the amount of debt they hold keeps going up, or the US starts spending less, then that is a problem which is only going to grow larger. These are all of the people that Trump seems to be keenest to piss off. Obviously, he's been pretty cozy with Russia and North Korea, but actually don't really have any assets, and they certainly don't hold much in the way of US debt. The Eurozone owns $1 trillion or so. Japan owns slightly more, at about 1.1 trillion. The Brits own about 900 billion. And actually, there's not any good reason for their holdings to be that high. And if they are pissed off with the US, that is one very easy way to retaliate, just by selling a load of it. That could really, really do some damage on bonds and cause the bond crisis that I was warning about as a possibility this year in my posts in October and November last year. I am still watching that as a possibility, and the further we go down this tariff road, in my view, the more likely it becomes. The other thing that was going to make it more likely was if Trump passed a irresponsible in the eyes of the bond market spending bill, tax and spend, and that, of course, is exactly what he's done. I was thinking the bond market might revolt early enough, or he might be scared enough of the bond market to actually be more sensible. Obviously, that wasn't the case. And budgets he might be talking about in due course them going down more, but I don't think, looking at current policy, the idea that the American economy is going to take off like a rocket at this stage, and the debt will come down because the economy is growing so fast, I think actually the opposite is likely to be the case. I think we're going to see growth getting pretty scarce. And that being the case, all of the estimates about the impact of this bill on the budget, on budget deficit and overall debt, are going to be underestimates. Just as they would be overestimates if growth exceeded expectations. As growth comes in under expectations, as it's very likely to do, then that will make the position even worse. And that will make the bond market even unhappier. And what I'll be looking at there, if we get, I've got an IHS here on TYX, if we get a serious disruption in the bond market, this IHS is going to break up with a target in the 95 area. Now, it isn't necessarily going to make that target, but I think it might. If we have a big enough crisis, if people start selling off a lot of American debt, if the economy tanks because the government is actually trying to balance the budget, or at least start looking as though they've got some kind of plan to pay some of this debt off, then yeah, for countries which are as heavily indebted as the US, usually interest rates really start at about 6%. We're currently at about 4.5 to 5 between the 10-year and the 10-year and the 30-year, and I wouldn't be surprised to see that head up to 6 or 7. By historical standards, as you can see on this chart, that wouldn't be unusual. And in fact, actually, until from the period from the start of, well, basically from 1980 to where would this be? 2004, 2005. Actually, practically all of the time, interest rates were higher than that. It was really just basically at the turn of the millennium that it started getting cheaper, and then it got really, really cheap up into the time of COVID. But this was exceptionally unusual. Normally, it would be up in these kind of levels or higher, and I think that may well be the case soon. All right, so let's move on and let's have a look at CL. Now, all of the oils, I've rolled them a couple of days earlier, I think, on oil, but I've rolled all of these into September. What are we looking at here? Well, we've actually got, I've drawn in, we've got a double top here, which is broken down with the target range in the 56.5 to 59.5 area. And if that is failing, which I'd normally expect to go back and retest this high, then we've got a little IHS, which is broken up with a target in the 69.5 area. Overall, equities down, economic activity looks bearish. That's going to drive oil demand down. So bigger picture, I'm leaning negative. Heating oil, I was looking at the fibs here, and we basically retraced slightly over 50% of this this move up. Retraced of this move down, and I am leaning towards this being a bear flag, which takes this lower. RBOB, less certain, but you can see again it's about a 50% retracement. We shall see. All right, looking at NG. NG, we've got a nice looking falling wedge here, and it's broken up. And I'm wondering about a possible IHS forming here. I've actually got a couple of next ones here, and there's another one here as a possibility. I'm thinking if we're going to go higher, we'll probably go up to one of these IHS necklines and form a right shoulder from there. At the moment, odds of that happening look pretty good. I'm thinking this is probably just going to be a rally. Reducing economic activity, of course, well, dampening economic activity is also likely to be negative for natural gas as well. All right, GC. GC is back over the monthly pivot, and I'm liking a move to the upside, although things look much more exciting on silver, which actually broke up and has been hitting my trend lines and actually been going a bit above. I've been calling for a target of 39 for the last few weeks. We've made it. And I was saying it might not necessarily stop till we get there, and we're seeing about that at the moment, but I'm thinking this might go significantly higher. Palladium, we had a nice looking double top set up here, and that failed and it went higher, so nice. Platinum hasn't gone much higher, but then of course this was much more excitable in the early stages. I'm thinking we might see a bit of consolidation here, but at the moment this has shaken off a lot of negative divergence and some bearish looking pattern setups to go higher. And really, if tariffs are going on and if equities are going to be in trouble, I see good things for precious metals. I like them, except copper is not one of those precious metals. So I'm not seeing great things for copper. I think this spike here is just because of the 50% tariff that's coming in at the 1st of August. I think we're looking at a lot of panic buying here, and that's driven the copper price up. I suspect after that, it's going to be heading down quite a lot. All right, great. Let's have a look at all of those. So let's have a look at the energies first. All right, on the oil chart, all this RSI 14 sell signal fixed, but at the moment we've been coming up, we've been backtesting the daily middle band quite severely, and we have failed there, and we're also failing at the 200-day MA at 68.38. So that's a pretty significant area to be failing, but against that, what I would say is heating oil has firmly established the daily middle band as support, and actually gas oil has done the same. Well, less firmly than heating oil, but nonetheless. So actually, while the overall pattern setups here remain bearish, only oil is the one which is holding onto the daily middle band. If that gets over the daily middle band, then there's definitely scope for some upside. But until then, I think I'd be inclined to take WTIC as the leader, and that one's been basically pretty solidly below the daily middle band. All right, natural gas. This looks to me like move down, bear flag, starting to break down. So bigger picture, I have to say this is a bearish looking setup. What we're seeing on the hourly chart is this little area here and the potential low we're making that could take us potentially up into a retest this high at 4. I'm not seeing a really strong case for that, but we will see. Natural gas obviously tends to do its own thing. All right, let's have a look at the precious metals. And looking at gold, gold hasn't been quite as exciting as I'd hoped. We are at least trying to break back over the daily middle band. Silver, wow, That was quick, because we've been in quite a longish consolidation, but you can see we were conversing the daily middle band support, and that's really gone. I've got a variety of interpretations of the trend line here, but we're close or getting very close or at that trend line on the various options I've done here. I was seeing 39 as a very important area. I wouldn't be astonished to see it break up, but I am expecting to see potential resistance here. All right, looking at palladium. Palladium, this could be a not very good double bottom, or it could be a bad flag for me. By historical standards, this is not richly valued at the moment, and I wouldn't be surprised to see it go higher. Looking at the daily chart, no current divergence. Platinum, however, I would note, does have divergence. We've got a weak RSI 5 sell signal fixed and a full size one brewing now, and we've got an RSI 14 sell signal fixed. I am wondering if that might deliver. I've seen this head up against in the teeth of these quite a way on a really strong trend before, and at the moment we are doing more upside, but I would note that we haven't made new highs with real confidence, not as we've done on palladium, and we could be looking at a topping pattern here. We'll see. All right, looking at copper, we went up, retested this high. I was expecting to see that. At this stage, I'm leaning down. I'm really not seeing much of a case for it going up any further. GDX, this looks like a bull flag. GDXJ kind of looks like a bull flag too, although not as nicely formed, so I haven't drawn any lines here. Not seeing much obstacle to these going higher with gold. All right, let's have a look at the other commodities. Okay, KC. KC, possible bottoming action here. 60-minute buy signal reached possible near miss target. Sugar, we've got a falling megaphone here. It's broken up. We are potentially forming a low here. We'll see. This could be a rather ugly looking IHS, but it wouldn't be pretty. I'd rather see something else. We had a little pattern here, which is kind of like the short-term topping patterns I'm looking at on equities. Those have broken up and made target, but they're only a little. The bigger process of the bottoming process is still ongoing. Obviously, we've got strong resistance at the monthly pivot. Wouldn't surprise me to see a retest the low, but I'm looking for a larger reversal pattern to form. All right, looking at cocoa, possible double bottom here. Since I called it as that and said I thought it might well continue down, it has been staying stable, so the double bottom is potentially still very much on the table. CT, head and shoulders here is broken down towards a retest of the lows, and at the moment, looks as though it might make those targets. Lumber, nice looking double top here. It's done almost nothing since I drew that line in 3-4 days ago, but I'm still thinking this is a nice looking double top, and the downside is the natural direction for it. On wheat, still wondering about a retest of this lower area here and about the 520 area. On corn, got a little lower here. This might be bottoming action. We're on a 60-minute buy signal. On soy, we're also on a 60-minute buy signal, and we've got a nice looking potential little level bottom here too. On soybean oil, this kind of looks like an ABC heading back up into a retest the high. We may see that. Live cattle, nice looking little nested double top here. 60-minute sell signals fixed. May well see some downside here. And lean hogs, we've got a head and shoulder target in the 103 area, and I think we may well be heading to that now. All right, let's have a look at those on the bigger picture charts. Okay, coffee. Coffee's been continuing down hard. We've got no current positive divergence, and obviously we blew through my possible flag support trend line. Bigger picture, coffee is still pretty overvalued by historical standards and may need to come back down into that more traditional area now. All right, looking at sugar. Sugar, bigger picture, of course, we've got this nightmare scenario where we may be heading down to the 6.5 to 9 area. We'll see how that goes. But in the short term, I am thinking this does look like potential bottoming. That might just be for a rally before it resumes downside, but this might be a larger low forming. Certainly, in terms of the head and shoulders that's broken down on sugar, that's a very, very large pattern. I don't trust large patterns, as I mentioned regularly. All right, cocoa, potential level top here, but this is way too vague. Would get us almost back to zero. So I'm not really expecting this to make target. But I wouldn't be surprised to see it go lower. If you're thinking that cocoa is looking as though it's just gone up to massive highs by historical standards, you're right, it has. And there will be pressure as and when this move is over for this to head back, reversion to the mean. And we may be looking at the start of that now. On cocoa, no current divergence. Looking at wheat. We've got nothing really happening here. We're still wondering about a possible retest of this low here in the 495.50 area. Looking at corn, wondering about a retest of this low here in the 385 area. Looking at soy, wondering about a retest of this low here in the 936.06 area. So I have been wondering about these retests on the downside, and it does look as though we may see them. Bigger picture, I think we are bottoming out in larger patterns. This is the falling wedge, which is starting to break up in soybeans. The big these are big falling wedges. This one here is only a 4-year wedge. The corn one, yep, 4-year wedge as well. And wheat, yeah, 4-year wedge. And these are breaking down. They look like they're in bottoming patterns. So I'm thinking we might well see downside first and then upside after. We'll see. All right, looking at cotton. Big falling wedge, hasn't broken up yet. I'm looking for it to break up now. We do have here a very nice looking double bottom, and it's pretty much perfect. And if we see a sustained break up over about 73.5 area, that could take us back up into the 80s and would be a nice thing to see. We will see how that goes, and maybe it won't make it, but if it does, I'd be looking for a target in the 80 to 83 area. Looking at lumber, still looks like a bear flag, and in the short term, nice looking double top, which here is starting to break down with a target in the 580 area. So we will see how that goes. All right, great. One last comment. If it plays out as I'm expecting, then we're probably making a high also on crypto, because while I've been talking this year and last year about the possibility that crypto might disconnect from equities, at the moment we don't have a shred of evidence to suggest that that's actually happened. And if it hasn't happened, and we're going to basically see trouble in equities and potentially big trouble in equities over the next few months, chances are that we've got no evidence to suggest that won't be rather unkind to crypto. So that is another thing to bear in mind here. Equities no longer look like a good bet. Crypto doesn't either. I'll be talking more about that. I'll be doing big posts on equities and crypto in the next couple of days, but basically that is going to be the message of both. The party is likely ending, and it could well get ugly. And am I thinking that we could see equities move considerably below the April lows? Yes, I am thinking that. And one thing I was mentioning when we were down at those lows, the possibility we'd come back and do a high retest and set up big double tops. That's what we're seeing. We came back, we retested the high, we've got very big double tops, and now tariffs are coming back. And if they're going to come back in a big way, those double tops could start playing out. All right, great. In that case, I think it's a wrap. I'll catch you guys again on Wednesday. Everyone take care.